Welcome back everyone to another dividend portfolio update video. If this is your first video, make sure and subscribe to stay up to date with my journey to financial freedom. Thank you all for watching so much. On this channel, I do weekly update videos on my dividend portfolio when I do my weekly deposits. Now let's take a look at some of this week's buys and allocations. So I want to get right into the buys. We've got 25 buys. We have $129 put into SCHD, $127 put into Clorox, $126 into Walgreens, $129 into Target, $202 into Procter & Gamble, $206 into Union Pacific, $198 McDonald's, $194 Altria, $192 Pepsi, $199 Coke, $199 Clorox, $200 AT&T, $200 Home Depot, $202 Kimberly-Clark, $204 Verizon, $192 AbbVie, $200 SPHD, $204 Johnson & Johnson, $201 General Mills, $201 Air Products, $201 Realty Income, $200 Broadcom, $194 in Merck & Co., $199 in JP Morgan, and $205 in Texas Instruments. So let's go in and we're going to go through all of the holdings. You can see we have 25 positions, $10,000 cost basis. And let's get into them. We're going to look at the 5-year charts. Merck & Co. Beautiful up and to the right pattern. 2.6%. We're going to try to go through these fast since I have 25. Procter & Gamble. 5-year chart. Look at that. Up and to the right. You're going to start seeing the consistent pattern. 2.63%. AbbVie, up and to the right, 3.78%. Johnson & Johnson, gonna be the same thing. Beautiful pattern, 2.79%. You can see it. I invest into dividend aristocrats, dividend kings that also have a great stock price history record. Verizon's chart, right when I say that, is definitely in a dip buy opportunity with a higher yield of 6.4%, but this is a huge company going nowhere. General Mills, beautiful chart over the last 5 years, 2.84%. Coca-Cola, everybody's favorite drinks, very sustainable pattern, 2.95% yield. Colgate, on that flat over the last 5 years, very sustainable, very good for dividend investors, 2.59% dividend yield. Union Pacific, up and to the right, it's a great dip buy opportunity, 2.5% dividend yield. You see how consistent that pattern looks? PepsiCo, talking about consistent, look at that, beautiful. That's what you want to put your money into and sleep good at night. 2.57% even with a pattern like that. Altria, definitely going to be one of the worst looking charts, but it is flat. Flat for 3 out of the 5 years. Very good yield. My highest at 7.72. Highest by far. Where did it go? McDonald's is next. 5-year chart. Just about one of the best charts you can get. McDonald's, I mean, come on. What better business can you get? AT&T, also going to look pretty rough. Dip buy opportunity. AT&T is going nowhere. They're just going to get bigger. They'll be able to keep paying their dividend. And since it's low right now, the price, the dividend is high. 5.77%. Kimberly-Clark, another good company. Been flat. The chart is they've had a leg up. They're going flat. They're looking like they need another leg up. 3.63% dividend yield. Feel good holding that. SCHG, first ETF here. As you can see, very great performance. Leg up, flat, should be another leg up. Expense ratio, there's their dividend, 3.34. Slight expense ratio, but hey, it's well run. Walgreens Boots Alliance, kind of double bottomed here over the last few years. Walgreens is going nowhere. Great dividend yield of 5.24%. Air Products. We all love the company Air Products. Kind of choppy, but overall, nonetheless, up and to the right with a 2.28% dividend yield. Clorox, a staple company in everybody's house, everybody's business. Great dip buy opportunity. This makes it look really bad, but over the long term, this is just a great, basically flat. The price started to take off back to pre-takeoff levels. Great 3.06 dividend yield. Texas Instruments, 5-year chart up and to the right. Great dip buy before we make new highs with a 2.68 dividend yield. SPHD, my second ETF that we've gone through, basically flat, but it's made it back very good since these last 2 years have been very rough. The last 5 years have been pretty rough. So to be flat, paying out almost 4% dividend yield, not too bad at all. Actually very, very good. JP Morgan, speaking of very good, the charts on a flat pattern. We've had some leg up, flat for a couple years. We're due for definitely a good several years up. 2.78% dividend on that. Broadcom, talking about a chart, look at that. Dip buy a few months ago was a beautiful dip buy opportunity. Very, very healthy company. 2.78%. These 5-year charts, they should tell you about this portfolio. Very, very healthy. I tried my hardest to pick on all metrics. Look at this. Great dip buy opportunity. Everybody knows anything about Target. The ladies love it. The men take the ladies there to love it. Look, they have everything. Target, not only do they have everything in their stock price. They have a dividend. What else could you want? One more after Realty Income. 5-year chart. Basically flat more or less. But that's great for a dividend investor with a 4.47% dividend yield. Very solid. I'm pretty sure they own Walgreens, the Walgreens buildings. So companies like that, they have solid contracts. And Home Depot, up and to the right on a dip buy opportunity. Very attractive with a 2.37% dividend yield. Now that is all the stocks in their 5-year charts, just so you guys had a quick rundown. $10,000 portfolio. Thank you all very much for watching. I hope you guys enjoyed the video. We'll be adding another 5,000 next week and another 5,000 the week after that. Make sure and like, comment, subscribe. And until next week, peace.